Solana is a type of cryptocurrency or digital money that only exists online. When Solana was first made available in April 2019, it was worth less than $1 a coin. Since then, its value has gone up a lot. As of November 2021, Solana was worth more than $200. If you look at coinmarketcap.com, it's one of the top 10 most valuable cryptocurrencies by value. Here's what Solana is and how it works. What is Solana? It's one of the most popular currencies out there, but there are more than 10,000 of them out there. Solana is the name of the cryptocurrency platform, and Sol is the name of a single unit. Solana was made by Anatoly Yakovenko, and it runs on a computer network called a blockchain. This blockchain database is in charge of and tracks the currency. It effectively keeps track of every transaction that has ever happened in it, like a long-running receipt. The computer network keeps track of the transactions in the currency and checks that the data is correct. Users can make transactions without having to go through an intermediary because the network is set up in a way that isn't centralized. Solana claims to be the fastest blockchain in the world. It claims to be able to check 65,000 transactions per second at a cost of less than a penny each. It's important to see crypto coins as more than just money. They can be used to power or make other apps on the platform work. Among other things, Solana can run smart contracts and other decentralized apps, as well as NFTs and more. What does Solana do? Solana can run a lot of different apps that have a lot of different features. It's possible to send or get the coin with a cryptocurrency wallet. You can also exchange it for goods and services. There are two types of smart contracts. Smart contracts are apps that automatically follow through with the terms of the contract once its conditions are met. Solana can be used to power non-fungible tokens, NFTs, which are often used in digital art. This allows artists and others to sell NFTs to customers. When you use Solana, you can make and use permissionless payments that don't have to be approved by the government or central authority. As well as its other functions, Solana helps with the development of a wide range of other apps. These include game apps, apps for investing and social media, and many more. As well as using a proof-of-stake method, Solana also timestamps transactions, which means that no one can change the order of transactions to their advantage. This makes Solana a network that can't be blocked. Again, think of Solana as a token that can be used to run different apps, not just as a currency that moves money from one person to another. Where do Solana coins come from? About 302 million Sol were in use in November 2021. Solana, like many coins, has a limited number of coins made each year. Coins are given to people who support cryptocurrency. Solana started by increasing its supply by 8% each year, but that figure dropped by 15% each year until it reached 1% each year, which is how much it will always be given out. This is very different from popular cryptos like Bitcoin, which has a total supply of 21 million coins, and Dogecoin, which has no limit on how many coins can be made. Solana uses a proof-of-stake system to verify transactions, keep track of its coins, and make new coins. To be a part of a proof-of-stake system, you need to own the cryptocurrency. Then, you can get money for helping to run the system. To put your trust in a validator, you must stake tokens with them. If a transaction is validated and meets the rules of the system, the stakes can lose money. This is similar to other proof-of-stake systems. It pays to be a validator. You get new coins in return for verifying transactions. You also get a cut of the rewards as an interest. In the next step, they pass on the rest of the reward to the people who have invested with them, based on how much they own. Is Solana a good investment? Solana has risen quickly in its short time on the exchanges, so even people who bought it recently are likely to have made a lot of money. But instead of focusing on how much money you've made in the past and worrying that you'll miss out, it's important to know what you're buying. If you look at it that way, traders are buying something that doesn't have assets or cash flow to back it. They are very different from each other. A stock is a small piece of ownership in a business, and its long-term success depends on the growth of the company that owns it. If the company makes more money, the investment is likely to be a good one. They have a right to the business's assets and cash flow, and the business may even pay them dividends. Solana, on the other hand, is not backed by any real-world assets like most popular cryptocurrencies are. They get going because other traders are optimistic and have a lot of ideas. In the greater fool theory, traders think they can sell the crypto coin later to other traders for a higher price, which is called the greater fool rule. So the rise in the price of digital currencies is caused by people speculating about how much they will rise in value. If people who are optimistic about cryptocurrency leave, it has nothing to hold it up. It's a big difference that keeps many investors, like Warren Buffett, away from cryptocurrency. The first thing you can do if you want to speculate on Solana and other cryptocurrencies is trade them. You can also invest in companies that could benefit from the growing interest in the sector. If you want to trade Solana, you need to be aware of the risks, because you could lose all of your money. Even though crypto isn't backed by any assets or cash flow, it can be very volatile. People who trade crypto should not put money in that they can't afford to lose, so this is a good rule to follow. Don't forget to subscribe to our channel.